Welcome to the Modest Investor channel, and in today's video we're going to talk about the bots that I built about 18 months ago. I did a video about it called My Little Trading Bots, and at the time I really thought I'd absolutely nailed it, but 18 months in, all the bots failed, to be honest. So in this video we're going to look at going back to basics. We're going to do some manual trading later on. We're going to try and work out where it all went wrong. So about 18 months ago, I built multiple different bots and put them all live. They were all fully back tested. They used different strategies, including moving averages, and also many different indicators, including sort of RSI, which is the relative strength index, and also moving average divergence indicators. They seem to work really well in theory in the back tests, but in practice, all the bots failed and started losing money. So we're going to work out why that's happened, and then we're going to go back to doing manual trading. At the time I thought I built a money making machine, and here's a clip of the video I did when I thought I'd be sipping pina coladas on a beach just printing money, but it didn't happen. So next up we're going to go through what went wrong. Then we're going to go back to manual trading to see if we can do it all manually, and then we're going to completely rebuild the bots over the next few months. First up, let's do a quick financial disclaimer. This certainly is not financial advice. As it stands, I'm recording this and I don't actually know how these trades are all going to go, that I'm going to show you over the next week. I'm going to publish every single trade that I do. I'm not going to hide anything, and I might lose, so you surely wouldn't take that as financial advice. And if you are going to take financial advice off a YouTuber who could be based anywhere, could be anyone, could be lying, then I would say really don't. Trading, as I'm going to show you today, it's pure gambling. It's nothing by that. It's complete speculation. Yeah, of course, it's going to be based upon statistics and theory, technical analysis, but certainly not financial advice. So now we're going to have a little look at why the bots potentially failed, and how we can improve them to make sure it doesn't happen again. I mean, the first big question is, does technical analysis actually work? There's a lot of people who say it does, and a lot of people have had very successful hedge fund companies which have used technical analysis, but some people like Warren Buffett, for example, really don't side with the people who use technical analysis on the whole, and they opt for a much longer term investment strategy and using fundamental analysis. But we're not going to be using fundamental analysis at the moment when we trade manually or when I start building the bots. So the second big question is, did I pick the wrong markets? And yeah, 100%. Some of the markets I did pick were wrong. This is all going to be done on a spread betting platform, which is essentially the same as trading, but the gap between the buy and the sell price can often get too large. So if you trade in the wrong markets, yeah, you're making things a lot harder for yourselves, and I did do that. I did trade some stocks which probably shouldn't have done, especially when the trades are out of hours. So I mean, that's another potential flaw, is trading out of hours. So in the new bots or the manual trading, I won't be trading out. I'll try and close my positions at the end of each day, hopefully. Anyway, I might let a few run just to see what happens, really. So yeah, that's that. I won't be trading Forex. 90% of traders lose trading Forex. I also won't be shorting, because that's notoriously hard, and I think that's where bots might have gone wrong there as well. I also think I picked a few of the wrong time framings. I kind of think anything under the 15-minute time frame might mean that, you know, you're trying to scalp basically in a lot of the trades, and if the difference between the buy and the sell price is too large, you're fighting a tough battle. If you're trying to get in and out too quickly, the fees are just going to add up. So yeah, I'm definitely not going to be going under the 15-minute time frame. Also, one of the big problems with my bots was possibly my back testing. at the time I was just clicking back test, and I knew that the sample size wasn't big enough. However, I didn't know actually how to make it bigger. Ridiculously, the button to change it to make it about 100 times as long, the back test, was literally in front of my eyes. And I will show that when I come to doing the back test in a future date, but we're not back testing anything today. It's going to be more manual trading. And finally, with the bots, the risk to reward ratio would have largely been ignored. So, I mean, it was totally ignored actually. I've got to be honest, I didn't program these bots to even think about risk reward. So when I'm manually trading, I'm going to make sure that the risk reward is at least 1-to-1, ideally much more like 2-to-1 or 3-to-1. So before we go into all the manual trades that I will be performing, just a few more points to note. We'll be using the RSI. So that's a relative strength indicator showing overbought at a mark of 70 and underbought at a mark of 30. But I'm not just going to buy once we hit the underbought level of 30. I'm going to wait, and this is where a little bit of thought I think comes in. I'm going to wait. I'm going to probably click down to the 1 minute time frame and just make sure that the market isn't continually falling. I want to see a little bit of stability, hopefully a bottom there, and then we will be buying in. So I think that's basically everything I need to explain before we buy. I will be setting limits. So it's looking like we've potentially got a trade here. This is the spot silver, and we're on the 15-minute time frame here. The RSI has hit the 30 mark and has again gone beneath it. As you can see, it did touch it there as well, but I'm gonna trade this one. I'm looking at the 1 minute time frame. It has shown like it may have bottomed out here potentially, you know, a bit of speculation, but we're going to buy this position. This is our first trade as a test. I've gone for 0.1 pounds per point. I'm going to put the stop at around about a bit further. We're going to put the stop to give a little bit of wiggle room at about 70 points. And as you can see, sometimes when it hits a lower mark, it bounces back, but it doesn't always bounce back all the way. So I'm actually going to put the limit to about here, where it started that big descent there. So we've got a risk to reward ratio of nearly 2. Our reward is nearly double what our risk is there. So yeah, I'm going to go for that. Okay, so our second potential trade is palladium. As we can see, the RSI is dipped well below 30. It's now moved up. We've got a green candle potential point, turning point here. This is the 1 minute time frame, so we're going to go for this one. I'm going to do 30p per point again. I mean, this is a tiny amount, isn't it? And we want our stop to be a decent amount below so that we don't get massively caught out. But you can see the spread's only 2 points. So and looking at the last bounce, didn't do well last time, did it, of bouncing off the RSI? But if we see here, previously it bounced way up and beyond, so you could have potentially made. So that does put forward the question, should we be doing trailing stops? But for today, I'm not going to be doing that. I think I'm going to go for about there, bit of a gut feeling. But so again, the reward is well over the risk. So let's go for this one. This is palladium. Okay, this is called the Wall Street market, 15-minute intervals time frame again, and it's actually called Wall Street on IG Index, which is what I'm using, but it's actually called tracks the Dow Jones Industrial Average. So here we go. We've hit oversold and we have been here for quite a while, to be honest. I've nearly bought this several times, but it does seem on the shorter time frame that maybe it's hit a period of consolidation. I'm hoping it has. So we are going to make this purchase. So we're going to buy this stock. It's such a big number that we're going to do 5p, because this is a very small account. Stop. Yeah, you don't have to do that. We'll give it a little bit of room, but not too much room. 50, and then I'm hoping it's going to bounce all the way back up. So that's probably about to. Let's try that, shall we? See what happens there, and we'll place that. So stop at 50 points, limit at 300. Let's just see what happens. Okay, my next trade is going to be on the Netherlands 25. That's the top 25 stocks in Holland. As we can see, it's just oversold. I mean, it has had a huge dip into it, oversold here and rebounded a little, but not anymore. I'm hoping that potentially it's tested this level and is going to bounce back. We look at the 1 minute time frame. It seems to be ticking back up again. Not 100% confident on this, but I need to try the strategy. We'll do £1 per point. Stop about. We don't need anywhere near that, do we? 2 points, something like that. And I'm going to try and see if we just go back to that level. So that's about 4. So again, risk to reward ratio. Our reward is double our risk, so let's try that one. So you get a rough idea of the strategy there, and over the next week I continue making similar trades, all based around the relative strength index really, and did so in commodities and indices. Now let's look at the results. So as you can see, bit of a disaster really. 14 trades in total, only 2 of them profited. That's the ones highlighting green. Overall a loss of £70.52. A small data sample, yes, and not a big loss either, but I think it's enough to park trading the way I was there. And in the next video we're going to go back to back testing, and I'll be sharing all of the results of what potentially could be a profitable trading system. So thanks for listening, and see you next time.